investors really want to understand where growth is likely to materialize at the sector level in 2026. So what sectors are best positioned to perform in 2026? Banking, telecoms, energy, manufacturing, consumer goods. And why do you think this is the case for any of these sectors?
Well, I will start with the banking sector first because currently they're already enjoying, and so I think the banking sectors will actually thrive. And one of the reasons why I felt they will actually perform is because a lot of them will re-raise. They just recapitalize, so you start seeing the impact of this recapitalization. I mentioned earlier on that we expect to see more like a CRR for this year. It means that they have more money to actually play with as well, and that will also affect their revenue generating positively, and will also mean that better profit after tax. And so I will actually pick the banking sector, and also I will pick the telecom sector. This is a sector where you mint some money. It's a sector where you mint cash. When you look at the level of performance that most of these companies have been pushing out, take for instance MTN and Airtel. Of course, it tells you that it's a sector that where you mint cash. When you look at their data revenue and even their call revenue, it tells you that. And don't forget, these things are necessity. They are necessity. People need it for business activity. People need it for communication. People need this to actually get things going. So I think the telecom sector will actually do very well. If you look at this, MTN is currently traded as high as 605 naira this week, and this is the same company that traded as low as 117 naira sometime last year because of their negative shareholders fund. Airtel, when you look at Airtel is already on full build on a daily basis because they're not even sellers. People are not ready to actually part with the ones they are currently holding. And when you see that happen, it tells you that people have the view that these things are more like a gold mine that you have to hold tight, and that's one of the things. So I think the telecom sector will actually do very well. Another sector that I also think should do very well is the insurance sector, and my view is premised on the recapitalization of that sector. The recapitalization of that.
We actually have, and the last episode we discussed this to a large extent. So if you're watching this episode, please go over and watch that. We also discussed about the recapitalization exercise expected from the insurance company. So Deepak, please continue.
So the recapitalization of the insurance sector will also play a good role, and means that we will see better valuation. I will see greater capacity from this insurance company to actually play in the market, and I also think that the government would not expect the insurance company to actually recapitalize without also helping them with policy that will further help to actually deepen or improve their capacity. And so I feel the insurance sector will also play very well. The consumer names as well, and so I feel that the capacity to consume will be better this year because if you're expecting to see rate cut, when you're expect the monetary policy guy to be a bit dovish, what it means is that the capacity to actually spend will actually improve, and because in the past we've seen more like the monetary policy where is a tightening policy where you actually mop liquidity from the system. So, but for this year, we'd like to see a bit of liquidity sitting in the system, and that one way or the other will actually help people to actually buy, consume things, and that will also improve that segment of the market. So, all in all, if they ask me to pick my first three, I'll pick the banking sector, I'll pick the telecom sector, and I would have loved to pick the energy sector, but my concern is what is happening in the global market. And in place of that, I will pick the bureaus.
Okay. Now, Deepak, if you were to allocate your investment portfolio this year, and you're looking at equities and fixed income, or if you have alternative investment, how would you allocate your investment portfolio?
Well, for this year, I will be a bit aggressive in some segment of the market. I have some names that, for me, I feel that actually heavily undervalued in the banking sector. So I'll actually play more in the banking sector. I'll play more in the telecom sector. I'll play more in the brewery sector. So I'll be looking to actually push out my funds in the equity market.
So you look,
Another 30%.
you're looking at 50
Another 30,
of
yeah, another 30% will
equities.
go to the fixed income, and the 20% will go to alternatives.
Okay. Now, I don't know, we've not discussed about the possibility of Dangote refinery listing on the exchange. Are you looking forward to that?
I think beyond me, the whole market is looking forward to that. I think when this instrument comes to the market, I bet to say that it will be heavily oversubscribed.
Yeah.
Because a lot of people are actually waiting for this. People can see, and that's what development can actually bring about. This is people can see what this is bringing to an economy like Nigeria, and people also see what will be the impact on the Africa as a whole. And don't forget that Africa is already working on this Africa Trade Agreement, the AfTA. By the time this comes to full implementation, it simply means that we'll see a better performance from this Dangote refinery than what we're currently seeing. So I think I'm also waiting as much as everyone.
Okay, so domestic and foreign investors often respond differently to the same economic signals. Do you think Nigerian assets are more attractive to domestic investors than foreign investors, or vice versa?
I think it's more attractive to foreign investors. And why? Because foreign investors, the way they are set somewhere,
yeah,
and what they are seeing there, they are not seeing as much as this elevated yield or return. When you look at, let's say, for example, put the United States, where the return is around maybe let's say 3 to 4%. And you can see a market where if you come and invest in automobile, you can get as high as 25%.
yes.
So it means that you are seeing close to 2,100 basis point spread. Of course, that is enough to tell you that that is actually very, very attractive. Even when you're building the likelihood of exchange rate risk, of course, you still feel that at least you can still net a 1,500 spread on that. So you also give room for carry trade from some of these people. They can borrow from low interest environment to come and invest in an environment like us. And that's why I feel that it's more attractive to foreign investors.